Dr. Narayan will be giving us his chart checks. Dr. Narayan, good morning. What do you have for us today?
Good morning, everybody. Welcome back to another edition of Chart Check with me, Dr. Narayan. And today, as usual, I have for you a stock which is a combination of fundamentals and technicals. And the first up, I want to speak about Godrej Industries. Now, this is one of the flagships of the Godrej group. Indeed, it's actually a holding company, and it has its primary business being in chemicals, but it is also into the FMCG area, into gourmet retail, into properties area through its holdings. So, all this has helped Godrej Industries show a very good trend for a long period of time. But the stock has been caught in a range for about 1 year after having topped out somewhere in the middle of 2017 or so. Now, what we can see from the charts when I look at it is that the bullish control on the stock has not been ceded, because if you use something called as the money flow indicator, you will probably find that it's been positive all through this one long year of consolidation. If you look at the more recent trends, what you find is that there are indications of an upside breakout which is being attempted here. So, the scenario here is that the correction has been in and through the time when the subsidiaries got listed, Godrej Properties, Godrej Agrovet, and Godrej CP itself started moving up and doing pretty well. It owns about 25% in Godrej CP, more than 50% each in Godrej Agrovet and in Godrej Properties. I think if you look at what has really happened is that the discount which a holding company gets used to be somewhere around 15% about a year and a half ago. That's now widened to about 40–45% because the other companies in the group have really moved up pretty well. Godrej Properties is doing phenomenally well. Godrej Agrovet is holding up pretty well. So, I think this is now attracting the value players in the market to spot that the widening of the holding company discount, and that is why I think there is a fresh traction in the prices. It's a safe bet. The range expansion indicates a target of about 775 on the upside, which is about 20% gain from here, and this is a stock with very limited downside. So, I think looking at it from both fundamental and technical angle, I think Godrej Industries should be a decent bet here. Now, the second stock that I have for you is not really a recommendation, but again something which we have been doing, checking fundamentals with the kind of technicals. So, Manpasand Beverages is the stock that I have chosen, and if you look at the chart of Manpasand Beverages versus something that I am picking from the past, which is Satyam Computer. Now, I do not want you to draw the wrong parallels here, I am just looking at the technical picture of the two, where we can see several parallels actually between the two charts which led up to the big fall. Now, the thing, why am I comparing these two? Because both of them had about 70–75% fall once the event relating to their fact happened. They both topped out much ahead of the market, nearly a year ahead of the market. The bull market was still going on, and 2007 Satyam topped out, early 2017 Manpasand topped out. They went through a consolidation phase where the news flow was good. The holdings actually increased from the institutional pack. Then they went through a phase of a sharp first decline, which went largely unnoticed. And later on, if you see, they went through a big process of consolidation, before which there was a big decline. So, I think the moves between them are quite parallel. And this raises a question that when the technical picture is not really in agreement with the fundamentals as are being actually known or put out, I think we should actually set up and take notice.